Welcome to Markets Now. I'm Michelle Rook with Scott Varilek with Kooima Kooima Varilek. And Scott, we are seeing some lower prices over in the grains, even after some soybean export sales, which you and I will talk about here in a moment. Cattle market seeing some pressure. Hogs are kind of seeing some mixed trade here today. Cattle market charts look pretty ugly. How concerned are you, and where do we need to hold here on the futures?
Yeah, thanks for having me. I didn't know we were going to talk about cattle today. I didn't really want to, but
Oh, you did too.
yeah, they're down $1.50 again here today. We've had getting a little bit used to these triple digit swings intraday and large ranges, and the volatility is on. So, back to the cattle on feed report last month. That's what really started this drive lower. As you've got a market at record highs, and many traders trying to pick the high. Where is the top? How high can we go? And nobody knows. And you finally get your bearish nugget of extra numbers on feed and big placements, due to a lot of reasons. Reason number one, you've got a cow-calf guy that has a lot of money in front of him, and they're interested in selling these calves now because they want to cash in while this market's hot. So big placements last month. We're probably going to get them again on this report. As there was a flurry to try to get those calves sold, try to cash in while it's high, because there's just still that nervous feeling. The cattle guys always get blasted with something, and we get our large break, and they want to catch this one. They don't want to miss it. So I think there's a lot to do with that.
Yeah, and we already have estimates out for the next cattle on feed report, and they already look pretty bearish. So that's not helping out, is it?
No, not helping. I think that's highlighted from the last report. We saw that, and now that's what the market wants to run with. We're really eager to see this next cattle on feed report. We've got that Thanksgiving Day, so it pulls up this report just a little bit earlier, and all of a sudden we have another one. It feels like we just had one. We're off to another one. So penciling in some negative estimates, and last week. Would have thought maybe the market was going to shake some of that news off, as we thought cash prices were going to be higher. It was if you wait later in the week, wait till Friday, you get higher prices. We kind of fell into that window, and the Packer won last week, and the higher cash did not come on a Friday. That was market thought that was going to happen, and everybody was very eager for it, and then it never did. And suddenly that's when everybody's trying to get out the same little door. You got too many people trying to get out. And we roll over the market that much harder, and it challenges everybody's hedge plans. How many hedges do you got on? I mean, as bullish as this market has been, it feels like none of us had enough hedges on, and you couldn't hardly stay with straight hedges because your margin calls were so high. So now you're quick to try to get back into some protection, and as you press it on the way up, you take the stairs up. It's easier for a trader to trade. But once you roll over and you want to start pressing on the way down, taking the elevator down, stairs up, elevator down, that's what the market feels like. Now, this is our third sharp leg lower here. We've kind of how a market can correct itself in three legs. But I kind of think we need to start holding this market now, because we're starting to break some pretty key support, some trend lines, pulling up these charts.
That was my first question you didn't answer. I said, where do we need to hold here?
I'm just too nervous to talk about the cattle, I guess. So it's a volatile market, and I don't know if I have a number right now that we need to hold, because it feels like, a short-term monthly chart looks like we've kind of broke that. And we all have that deer in the headlights look. I mean, I'm drawing lines all over charts, trying to find out what's going to stick. We did hold on halfway retracement on the D's cattle, so maybe that's a spot, and you hope so. At the end of the day, us cattle guys, we're nervous. We're kind of hanging our head a little bit, but we're still at 180. Right near 180 on the board, and we were doing cartwheels when we hit that last spring. So it's been all the way since last spring we've been at these prices or higher. So still have a good market in front of us, but that does, also say, we're still at a high price. There's definitely room to the downside yet, if it so wants to.
You mentioned cash, and we haven't had a lot of cash news this week, have we?
No, it's been real slow again. I think there's just, I've heard of a few 179 bids in the south, some 181 in the north, just very light. I think there's some asking prices around 183. Packers can pull from contracts as we pull into November. They've usually got, heightened seasonally amount of contracts here for November and December, but they are less in general from what they would normally have. So, yep, get those contracted cattle gone, get them moving. Seasonally, we can see a little bit of a rally towards the end of December. But as we enter the fourth quarter, or the first quarter, excuse me, it's usually a little bit tougher sledding to me. We've had such a big shift in when we market cattle. You know, in the north, you used to have your fall runs, your large runs in October that hung out through the end of the year as we tried to move cattle. But we market more cattle in the first quarter than we do in the fourth quarter. So moving into that first quarter, if we can't do it now here by the end of the year, curve some of this rally, I think it's going to be tough for the first couple months as we turn the calendar.
Yeah. Hogs had an update yesterday. Almost felt like there was some cattle hog spread unwinding going on there. But today, the front end of the board is trying to hold together. Here is that, technical, or is that a function of this weekly export number was really good, or what is it?
I do think you highlighted the cattle hog spreads, and that does seem to be a little bit evident as these cattle do finally roll over. The hogs finally do rally, and they've been working that way. Seems like for an extended period of time. So that definitely is part of it that adds to it. I don't think there's a number you can say, okay, this is the exact effect that needs to have, but just knowing that that's happening. So they've had their run, got themselves a little overbought, and not on a lot of fundamental news. Maybe just probably your weaker dollar is helping out. You've got a little bit of China talk. We've got some increased exports here on this export report this morning. So that's always good news. And they're going to need more of that China news, I think, if they're going to try to extend any kind of a rally. So we've got weights 3.2 pounds above a year ago level, and a large enough supply that I think that's going to be tough for this market to rally. I'm looking for a little correction lower after the sharp rally that it has had.
Speaking of China, we got some confirmation again today of more China export business on soybeans, some to unknown destinations, 63 million bushels total. But we kind of have traded it already, haven't we?
That's why the market has rallied as hard as it has, is we're looking to the increased China business, and we're seeing some of it. So I don't know if it's a buy the rumor, sell the fact kind of trade. It acts like that at the moment here. As we got near $14, and we were probably a little bit negative when we were at $13, and now quickly at 14. So I think the market's due for a little bit of a correction here.
Running into resistance, aren't we?
Yeah, not saying that I'm a long-term bear here. It's just more of we've got past this harvest pressure. We've got some good demand in front of us, and I still think it can be good. We got our dollar a little weaker, like I said. That's going to help that market out. Report today, I don't know that that's going to do much for the soybeans. We're going to quickly turn the page and start highlighting what's the South American weather going to do, and that's going to be your large focus.
Yeah, definitely. That's been part of the push here on soybeans as well, is some issues that have cropped up here. And CONAB this morning actually bucking the trend and going up on Brazilian soybean estimate. And so that might be a little bit of a headwind here today too, it looks like.
Yeah, the weather's been a little bit friendly, kind of adding to some of this rally alongside the demand talk and the China news. So we know what the markets can do during our growing season here in the United States, create a lot of volatility. When it's too dry, we're going to move higher. And now with South America being the bigger player in the soybeans, I expect that to be the same. We're going to be watching weather really close down there. Now, the other side of it, CONAB coming out with they're going to plant more acres in South America, 2.8% increase in acres. So that's kind of what happened to us last year. There was some pretty friendly stories as far as weather's concerned at some dry areas, and only to come back with, production was pretty big, added because of increased acres. So they're still in the adding acres category, and that's going to dampen some of this weather in the long run. Mm-hmm. Short run, I think weather will be the main story, and we're going to kind of discount the added acres yet until we get towards the end and start counting some bushels against acres.
Yeah, we probably won't trade the report very long, and then we'll turn to South American weather. Now, the corn market obviously has, tried to follow soybeans, but been pretty reluctant to follow. Is that concerns that we're going to see higher yield in the WASDE report, or is that just the function of this wheat market?
I think the higher yields is probably part of the reason that corn cannot get up and move.
Okay.
Better than expected yields. I don't know how many more times I have to say that. Hopefully, this is the last one. Let's put that one to bed today, maybe. So we had a large enough supply, and I think that's just kind of an overhanging the market and unable to break out of this range. Now there was a little hope that a market that was so sideways, trading up 2 cents, down 2 cents, kind of moves. We've had some 7s and 9s and 8s, so it feels like, okay, maybe that's how a market can put in a bottom, when you start to have some bigger daily swings. But if the beans are going to start correcting, I don't know that corn can do it by itself and just take off and break out and move higher. So it's going to have to be helped along, just with the large enough supply and call it a little bit poor on the demand news. So those two going together aren't going to help that market.
Yeah, that's why I said it's been a really reluctant follower when soybeans have gone up, for sure. Okay, thanks for joining us, Scott Varilek with Kooima Kooima Varilek. That is Markets Now.